Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5:01. I'm a little bit late. 5:01 in the a.m., September the 23rd, 2020. All right, let's spend a few minutes this morning talking about lightening up on heavy positions. Yesterday, we booked profits on a long position fiver. It was a quick swing trade, but we also lightened up on one of our core positions, which was the GDXJ. And we did so because the dollar continues to press up higher. And gold, it's coming off its highs now. This is a 30-minute chart. Let's go to a 4-hour chart. So it's still a fairly strong chart on a 4-hour basis, on a daily basis, meaning the dollar, while gold is getting monkey hammered this morning, down over 1% and back down below 1900, which is psychologically significant. So in this market, it's really important to focus in. Larry, good morning. Sad to hear what's going on down by you. RL, good morning. It's really, really important to pay attention to divergences, meaning if you have a dollar that's breaking out, what are you long of that could be adversely impacted or positively impacted by the strength in the U.S. dollar, and lighten up accordingly. Because while it never feels good to have to lighten up on a core position, which you believe longer term is going to move higher, when you wake up and you see that it's the wrong chart. When you wake up and you see that the shares that you lightened up on the day before are gapping down, maybe they'll rally back for all I know, but at current, gapping down, it makes you feel pretty good. So what we'll be doing now is watching for, because I still like the GDXJ. What we'll be looking for now are price points below to get hit, so we could re-enter, assuming that the dollar is topping out, or wait for support to get recaptured. Otherwise, we're spectators right now. We lightened up, we have cash on the sidelines, more cash, and we can just simply watch and see how this all plays out. So that's the value of if your trade's not going right and you have a dark cloud overhead, meaning an adverse correlation, such as the dollar rallying, first out, best out, and move to the sidelines. Good morning, J.A. Paul, good morning. Hey, Paul, Pat's brother. Good morning to you. Paul, what part of Florida are you in? I believe Pat said it was Florida. Here's fiber. We booked profits right up in here as we broke out above this resistance level, but faded a little bit. We did rally into the close yesterday. So we didn't get out at the highs, but just off the highs. But now we're pulling back this morning. And I haven't even taken a look at the averages just yet. I'm looking for a property down there, RL. Looking for a condo. I'm not sure East Coast, West Coast, but I have family on the West Coast. Um, what else do we have? Let's go to the averages. Let's see what's going on this morning. So we'll keep an eye on the dollar. Oh, Tampa Bay, you told me that already. Yes. I'm looking over in Clearwater, St. Pete. Ideally, a water view of some sort. The price is skyrocketed down there. But I want to take advantage of these yields. S&Ps are up. We're right into resistance. So while it's a good-looking morning, beware. It's an ascending wedge formation. I'm not saying we're going to roll over. I'm just saying that there's a potential. You know, many times you see a breakdown below support, as I have here in red. We're in a denial stage, just as like we were back here. We broke down below support, rallied back. We even danced around up here, but ultimately failed. Many times you don't even see a recapture of support. Many times we just stall out, then roll over. Right at resistance. So we're up this morning about a half percentage point. Oh, Paul, you're on the East Coast, Boca. I'm very, very familiar with Boca. I haven't been there in decades, but my grandparents used to have a place down there. I used to go fishing out. I'm not sure what marina, but we used to go fishing out of there, drift fishing, kingfish, barracuda. That was a great time. Let's go to the NASDAQ 100. I think the fishing's better on the East Coast than it is on the West Coast, and that's one of the things that's attracted me to the West Coast. NASDAQ 100 continues to perform today, not as strong as the S&P 500 as a whole percentage-wise, but technically we're doing better as we are moving above a resistance level. The question is, do we close there? This bar is a 4-hour bar. It's only 9 minutes old and scheduled to close at 9 o'clock. A lot could happen. We'll see what happens. We'll turn that green, turn this red to represent support. Okay. Let's see what else we got. The Dow. I rarely go to the Dow, but I've had a theory about the Dow of late, and it's up. It's outperforming the S&P 500 and the NASDAQ 100, which is rare of late anyway. Now, that could be because they mixed up the composite a bit. So let's keep that in mind. They got rid of ExxonMobil, which is a complete laggard. Although I did buy some. It's yielding over 9%. So I just tucked that away. Sam, you're on fire this morning, man. Trent, good morning. Yeah, and they're yielding, Trent. They're yielding. I think the only thing that's missing is growth. We have to get this election past us. We have to get this election past us. And I think that as soon as this election is over, all the fake news, all the fear and doom and gloom, it'll probably go away. Bonds, 10-year note, consolidating. I have my concerns about the 10-year note. As a matter of fact, I'll bring up the 20-year note. I spoke about this last night with members. Before we do that, we're in a deflationary trade. I want to see what tips are doing. I didn't go over that last night. Yeah, they're weak. But they're holding support. They're not getting decimated. Oh, tomorrow night, folks. Thursday night, Stock Charts Live. We'll be on at 6 p.m. Eastern Standard Time. I can't believe it's Wednesday already. On YouTube, so please join us there. There's a link below if you want to get alerted 15 minutes to a half hour prior to us going live. Just enter your email address. We hate spam too, all that good stuff. TLT. I'll just type it in. iShares. So last night we were talking about this on Market Wrap, and the TLT, which is the 20-year bond ETF, it had broken down, and it's in an ascending wedge formation. And you're seeing lower highs across the board on your indicators. RSI remains below 50. This is ominous. And when you take a look at yields, 10-year yield, it broke out last week. It's pulling back, retesting at current. We're slightly down on the week, but we could easily surge here. We have a beautiful W formation. That's the higher level view of bonds. Short term, they're consolidating nicely. It looks as though they're going to press higher. They just went negative. It looks as though they're going to go ahead higher. Very, very short term, forcing down yields. But man, if that doesn't happen and yields surge, you're going to want to take a look at the banks. And they're getting decimated at current. And you're going to want to go back to gold, silver, the miners. Here's my Rocket Mortgage, finally catching a bid. Yep, we saw that, Jay. Yep. What else do we need to go over here? I'm scatterbrained this morning. I wasn't prepared. I got up late. All right, we went over the S&Ps. We talked about the ascending wedge. And these are all 4-hour charts, folks, just so you're aware. And what's driving the market right now, have no doubt, is the U.S. dollar, which is coming off the highs of the session. It's dropping precipitously now. 15-minute chart. We were up only a short while ago. Now we're negative. So my guess is that we're seeing a bid under gold, and there you have it. There's the inverse correlation. Yeah, I think the Dow is going to have a good day. I don't blame them. I think that stock split, I was even saying it ever since the day they announced it, to the day they executed on the split. I said this is probably the top for Apple. All right, let's take some requests. All right. So we have Tesla. I'm looking on my screen here from the members portal. Tesla. Wow, you guys hammered me last night. GME. BIGC. TSMC. PayPal. Logi. LOGI. Wow, got a lot here. And AVTR. Yancey. Okay, let's take some chart requests. I have to go to members first, so if I have time, we'll go to about 5:30, 5:35 this morning, and we will get through these. I will be using TrendSpider, folks, for members chart request. Oh, wrong website, Desmond. RL, I got Roku. Yep, going to be doing that. All right, the first one up is Tesla. I think they dumped yet after hours. This is one of the tech plays I was going to put on. I decided to go with Fiverr, which worked out well. I didn't want to go with Tesla because while the chart looked good at the time, I was worried about headline risk, and sure enough, they got monkey hammered over the night. So they're down 20 points from the close yesterday. Tesla battery day announcement makes suppliers bleed at the stock market. All right, whatever it is, it's not working out well for the company. This morning anyway. This is not reflective of the pre-market activity. I don't believe. No, it's not. This is as of the close. All right, so higher level view. Big snapback here, at least as of yesterday's close, off the lows, but still not a pretty chart. Monthly basis for Tesla. We closed out last month above the third standard deviation Bollinger Band, kissed it again this month, rejected. Now the weekly chart doesn't look half bad, but we're right back down here at the lows of the week, and that's not good. Daily chart. Yeah, we're going to, assuming that we open up where we're trading at current, we have a breakdown below this lower band of support. I think there's a very, very good chance we're coming down to 380 the share. It's very difficult for me to read this font. 380 the share on Tesla. And we may bob around at best within this wedge formation for quite some time. That's at best. At worst, we break and move lower. So I would avoid these shares. I wouldn't short Tesla because it's just too wrought with headline risk. So that's my take on Tesla. GME, big short squeeze play. We went over this a few weeks ago. And the short squeeze continues. could see our alerts fired off here. Remove. Remove. Now let me remove. There we go. All right. So Tesla broke out in August. Continuation breakout this month. We're just off the highs of the month. 8.75 thereabouts is a support level. I suspect we'll retest that. There's a very large short interest, or was a very large short interest in GameStop. And that was why we were watching it, expecting a breakout. It happened. The question is there enough fuel in the tank by shorts, meaning for them to get squeezed for this stock to continue higher? That's the big question. We'll keep it active a few days. I don't think I would buy the stock at current because you're chasing it. Yeah, definitely not. I would not buy the stock. It's extended relative to its third standard deviation Bollinger Band. We've already retested on a weekly basis support. This is all shorts getting destroyed. Daily chart. We gapped up higher yesterday. Indecision bar. Spinning top formation. $9.88 support immediately below. You know, being a short squeeze trade, the horse has already left the barn for me on this one, so I wouldn't necessarily trade it because, again, I don't know how much fuel, I don't know how many shorts are left to get squeezed to keep this rally going. So I would wait for weakness. If you're bullish fundamentally on GameStop, wait for weakness. They'll run out of shorts soon enough and buy at a support level. I would not chase it. And in fact, you saw big topping action yesterday. And remember, weekly basis, we're trading above the third standard deviation Bollinger Band. I would avoid this. Seasonally, we have data going back to We have data going back to 2009. Do we have any more data? Yeah. Back to 2002. September up 56%, up 59% in October. So seasonally favorable. But then we drop off November, December, horrible month, seasonally, and January even worse. So I would wait for a pullback here, retest the support, but you may see a continuation breakout. Seasonality is good for the next month or so. Then it begins to dissipate. All right, next chart up. BIGC. Big Commerce. Not enough data, monthly basis, weekly basis, not enough data. All right, this is an IPO. I can only use the daily chart here. We have broken out. We have resistance immediately above. I wouldn't be a buyer until we closed above, ideally $80 a share. You have some big volume shelves above. You can see that this one acted as support. This is going to act as resistance. We need to wait for a recapture of either Ideally, this support level here. I'm going to create a new one. I've already been in here, as noted by my manual chart. That's 83.38. 80 bucks a share. Yeah. I need to see it close above that mark. Otherwise, all we're continuing to do here is put in lower highs, lower lows. There's no compelling reason to go buy these shares at current. Sure thing, Emilio. All right, what else do we have? TSMC. TSMC. Did I write that down wrong? Why is that not coming up? TSMC. That's what's on my portal. It's not coming up on TrendSpider. It's not coming up. Chris, if you're out there and you're watching, I'm looking at your request for TSMC. It is not coming up. I'm not sure what the symbol is. My apologies, I can't go over it. Chris, if you want to re-enter it, I'll be more than happy to go over it either tonight on Market Wrap or tomorrow morning on Swing Trading Today. PYPL. A once high flyer. Let's see what it's doing on a monthly basis under a lot of pressure. Okay, not a bad week so far for PayPal. We have broken out at current. Still a couple trading days left to go in the week. Do we close above this resistance level? The jury's out. But it's looking good so far. Daily chart. Just keep an eye, before we leave the weekly chart, keep an eye on these Stokes. They're right at the 50 level, a little bit below. And rallies tend to fade. So, folks, when you get these Stokes, for those that are familiar with how I trade using the Stokes, I really don't use them for overbought, oversold that much. Excuse me, my voice is going. My apologies. I use them more as an identifier of how momentum is flowing. And while price is looking good thus far this week, Stokes, while they're attempting to flatten out, are down below 50 at around 47. And history has taught us that rallies tend to fade. So be careful here. It looks good at current, but we still have Wednesday, Thursday, Friday to go. So our breakout was on Monday, followed through yesterday. We have a bunch of moving averages up here to get through. Keep an eye of where we closed yesterday, right at resistance. So I would wait here. It looks good, and I would be interested if we faded, pulled back, now I make a little bit of a note to myself. Weekly Stokes. Okay. I look at so many charts that if I don't make a note, sometimes I just forget. All right, so if we were to pull back and do a retest here of this breakout point, which is highly likely, I would be interested. But that also means that we would be fading on a weekly basis. And what's more important to me is that on a weekly basis, we hold this breakout point. So that means that we need to rally back. We need to bounce off of this support level by Friday. So it looks interesting. I would not buy it now unless I would revisit it on a close above 188 per share, because that means it would have closed above resistance. But at current, a pullback. Let's check out seasonality. How much data do we have here? I want to go back as far as possible. It's only got 5 years worth of data, so let's keep that in mind. October, I think somebody just wrote this. RL just wrote this, that October is a seasonally favorable period of time, and it most certainly is. Up 80% of the times over the past 5 years. And then, oddly enough, we drift down a little bit, but still favorable into November, December. Then we pop back up in January. February, March, not as good. August, September, horrible. And September, we're seeing that at current. August was bucked the trend, though. Just goes to show you need to keep an open mind about seasonality. Okay, what else do we have? Logitech. All right, another one, we're off the lows of the month. We still have a few trading days left to go. We were overbought back in July, traded sideways, alleviated that overbought condition, which is really good. One thing I don't like is that we put in a new monthly low this month. But that being said, I believe we put in a new high. Yes, we did. By 53 cents. Weekly chart. All right, so on a weekly basis, we have a breakout. Stokes are hooking back up, still strong. Daily chart. Very nice price action here. We had broken out here on the 21st. Yesterday, something I always look for is a pullback and a retest of support. We got it. Now the key is, do we get a follow-through to the upside? And it looks as though we may. So Logitech looking pretty good here. We closed above this volume shelf, which is good. So Logi looking good. AVTR. Monthly chart, stalling out a bit. Not a ton of data here. I don't want to waste time on a monthly chart with little data. All right. So what we're doing is we are retesting a breakout point. We consolidated nicely within a wedge formation, broke out a little bit of a fade last week. This week, but it held last week, which is important. This week, we are retesting support, and it appears to be holding. Stokes is still strong. RSI is still strong. Just beware a little bit of a lower high action going here, but we did recapture support. So RSI is okay. Daily chart. Very tight Bollinger Bands. Good to see. Could get a Bollinger Band squeeze here. I would buy on a retest of this support level. Okay, so we'll keep this active next 5 days or so. I would also be interested to either open or add to an existing position on a breakout above resistance. Hey, NY. I'm late to the party, but Riverview, Florida. Is that Central Florida? Hopefully you are keeping up with your workouts. Yeah, it's to a certain extent, but my gym, it doesn't open up early enough for me. They're still not at normal hours. So the workouts I'm getting are like half-assed. I'm rushed. But my diet I'm finally getting back on track with my diet, which is good, no carbs. And then I have Sober October coming up, which I do every year, where I just go full bore, no carbs, no alcohol. And this year, considering my COVID pounds that I put on, I may even do Dry-Vember, which again, same thing, no carbs, no booze, no nothing. Gotcha. RL, you're south of Tampa. All right, so you're on the West Coast too. All right, so AVTR, this is the play. Pullback, retest of support, nibble, stop loss right below, add more on a breakout above this resistance level. It looks good. Just beware. I always have my bewares. We looked okay on a weekly basis on RSI. I put on a daily basis. We're putting in lower highs. So just be forewarned here. You don't want to necessarily, we broke down on RSI too. You don't want to necessarily trade all the time off of your indicators, but they're indicators. They imply where momentum may or may not be headed. So just beware. A little bit of weakness on the indicators. Price action, let it come to you. Does it hold the support level, or are the indicators accurate in saying, you know what, there's some underlying weakness here? If it holds, great. If it earns the right to be purchased more, it'll prove itself on a breakout and a close above this upper band of resistance. Simple as that. All right, so let's go to the audience here. Sam, you're on fire today, man. Roku. This thing spiked the other day, I saw. Very nice. Monthly chart. I mean, who doesn't have Roku now? All right, so we broke above resistance in August, continuation breakout in September. We're right at the highs of the month. Weekly chart. One way to play this, if you don't want to chase it, wait for October's retest or next week's retest of 186.12. That marks the breakout point or the high of August the 21st, the week of August the 21st. I mean, no divergence here. I mean, this is rock solid. Daily chart. Here. Breakout, retest. You're probably going to get a follow through. Good looking chart. I don't know how much, excuse me. I don't know how much data we have here in terms of seasonality. We only have a couple of years worth of data. I don't even want to waste time with seasonality here. Too thin of data to put to work. All right, so Roku, bullish, KHC. Kraft Heinz. Wow. You got to look at these stocks. They're throwing these staple names away. What's this thing yielding? Yielding over 5%. All right, so where we're at right now on KHC is we're at a critical juncture. This support level marks the low of this volume shelf. So while we're able to break through it, let's say in July, right now it's being retested. And if it fails, we're going to be trading back down below critical support. Now acting as, we'll close back down below support, which is currently acting as support. We closed right at it yesterday. If we fail to hold it, that sets in place a whole new round of selling. So the question then becomes, do we retest the lows of March? If that fails, we're coming down here to this lower band of support. Note how what was resistance will now act as support. So we're probably going to come down here to, let's throw up another support level here. $29 a share. That's a good support level. Would I buy right there? Probably not. I'd want to see whether or not it bounces, holds, just as like what we saw back here. It's really critical support. And we may even overshoot to the downside, as we did multiple times in the spring, and retest the $28 per share range, $28.20, $28.18 to be specific. Stokes is still weak and declining. Don't be shocked if we get down there, because these Stokes are very, very weak. Daily chart. Yeah, rough day yesterday, outside reversal day. We're probably going lower here, but we have decent support levels to trade off of. But to me, I would love to see a washout in this name and just tuck it away, just like we did with ExxonMobil. That's yielding over 9% now. We bought some, it's weak, but I think that we could get these stocks are getting thrown out with like a baby with the bathwater. I want to say dogs of the Dow, but these aren't, at least ExxonMobil is no longer a Dow stock. You're going to see these mega cap names, these old staple names, turn back around probably in 2021 after the election. So you're getting paid a big fat yield, and you have a ton of upside potential. Seasonality, not wonderful. September's not a good month for Kraft. November even worse. October's a meh month. 50% of the time closes up. December improves. The Pimp Mac Daddy month is January anyway. We actually have a better month, which is May and June. But January seasonably favorable. This only goes back 8 years. There's got to be more data than 8 years here. Let's see. Really, there's no more data than 8 years? That's a shocker. All right, so that's my take. I think we head lower here. There's opportunity, no doubt. Not so much as for a trade per se. I think it's more if you're looking to take a nugget and throw it into your longer term portfolio and get paid a big fat dividend, Kraft Heinz. But look for it at lower prices and a higher yield. Plug is a short. So as a short, we're going to stay very short term here. What's the rationale for the short trade? Because I'm not seeing it at current. Daily chart. I mean, before we leave the weekly chart, we're within a triangle formation. We've retested 3 weeks in a row, 4 weeks in a row. The lower band of support, we've rallied off of it. Oh, I see. All right, so this is a Tesla derivative play. Gotcha. Now I understand. So let's go to the pre-market activity. Tesla really, really weak here. A little bit of weakness in the pre-market. We're bouncing back here a little bit. In a situation like with Plug, where you're having a reaction in the pre-market, I don't want to pay attention to that. What I'd rather pay attention to, because this is where the contrarian indicators come in. What if? Let's play a what if game. And the last time I had one of these went back to when Carnival Cruise Lines several days ago reported that they were going to dilute their shares, issue more shares, and they reported forward-looking guidance, which is going to be abysmal. What happened on that day? The shares closed up. And I even mentioned, I think it was fellow member Pat, who we were talking to about this. And so I was negative initially. Said, wouldn't it be interesting, because they were getting hammered in the pre-market, wouldn't it be interesting if they close up on the day? Not only did they close up on the day, they didn't even put in a new daily low. Now, they've weakened up since then, but so is the rest of the market. So, Plug daily basis. I think what you need to see is a break below and a close below, more importantly, support. And in this case, 12 spot 2-2. Nibble to the short side. Watch for them to rally it back tomorrow. If in fact we do close below support, watch for them to rally it back later this week, early next week, to try to recapture this support level at current. As of the close yesterday, I would set up an alert, and I would look to lean more if we fade off of that resistance level. So it's a two-prong approach. lean into or open short. But that's a secondary event. The primary event is that we got to break through support and, most importantly, close there, because this is not a bearish chart as we closed out yesterday. Overall, it's still a strong chart. So I would wait to see how we close. Because there's probably going to be a lot of people thinking exactly what you're thinking. Derivative play, batteries, Tesla's down, this stock will drop down. Maybe. Or maybe it could reverse to close back up on the day, bucking the trend. You know, I'm not sure about this Tesla news and how much of Plug's business comes from Tesla, so you're going to have to forgive me there. I'm talking about it from a purely technical perspective. So take it at face value. I'm not sure how much of their revenues and earnings come from Tesla and how much they might be adversely impacted, if at all, by the Tesla report. VRXT. VXTR, sorry. VXRT. Duh. VXRT. You'll get it right sometime. Okay, there you go, Bob. Okay. Let's identify where we've been to understand where we might be going. Looks as though I've already looked at this chart. All right, so a very, very big breakout here on VXRT. I mean, huge pimp daddy move. We became overbought relative to the third standard deviation Bollinger Band. That froth has come off a bit. So right now on a monthly basis, we're within a trading range, but a strong month. Weekly basis. So you can see how the volume shelf comes into play here, because that's where the resistance is. There's a tug of war going on at this price point. $9.34 is critical, excuse me, critical resistance. A close above that mark would be very attractive. So that's what I would wait for here. And if we happen to, by chance, pull back to $6.43 per share, give or take a penny, that would also be a very nice entry point, giving you room between support and resistance. Would I enter a trade right here, right now? Daily chart? No, I think the game remains the same. I think we need to see a close above this resistance level where we have our alerts set. I think Stokes looking good. RSI is looking good. Let's take a look at seasonality. And folks, if you have any appreciation for TrendSpider, there's a link below. 35% discount code. That's what we're using here. Seasonality, September, favorable, drops off in October, picks up again November, December, January. And we have 18 years worth of data, so it's respectable data. That's VXRT. Let's see what else we have. Oct. Oh, we already went over PayPal. Okay. Paul Kirkland. Nice. Interesting. Early stage recovery play. So we broke out in July, continuation breakout, tapped the third standard deviation Bollinger Band, gap down on, not gap down, we're down on the month, but we're off the lows of the month. Weekly chart. We broke out on the week. I'm getting the feeling you could still see some backing and filling here. Our Stokes are rising, which is good, and they're back above 50. RSI above 50. Let's go to the daily chart. Nice. I think it's going higher. Breakout, retest 1, retest 2. Here's the 20-period moving average. It's holding the support. It's flattened out. Soon will be rising. Stokes going in the right direction, which is up. RSI going in the right direction, which is up. Not a ton of overhead supply above in terms of volume by price. I think it goes higher. I think it's a buy. And once we begin to close above these resistance levels, you could add more to the trade. All right, with that, folks, I want to say everybody have a profitable trading day. Please smash that like button. Join us tomorrow night, Thursday Night Futures Live. That's 6 p.m. Eastern Standard Time. Use the link below to enter your email address. We'll send out an alert when we go live 15 minutes in advance. If you're already on our email list, don't re-enter your email. Pass on that because you're going to get an alert anyway. And otherwise, again, have a profitable trading day. Be well.